Okay, guys, sorry, my recording stopped. I didn't know it was up to 15 minutes already. So look at USD JPY. We're looking at this. Look at USD JPY. I was trying to show you something here. Look at this long black candle, and then there was this here. There was something here. There was a block here, or there was a blue or green, depending on the candle you're using here, before the sharp move down. So all you just have to do, you are going to mark this area, either the close or down to the high or the low. You can mark it and then project right. As soon as price came there, what happened? It rejected. We marked this one now. This thing is not catching. It's not picking. Alright. I can mark this one now. This whole area. But one thing about the JPY pairs is they are somehow so stubborn. The JPY and the USD close together. They are the two most traded pairs in the world. You understand, the JPY and the USD. Okay. Most traded currency, not pair, most traded currency in the world. So you see this whole area, these two candles now, these two drop can be categorized as one candle. So you can mark this one and project right. But this price did not obey this. Price actually was breaking above this area. It is normal, okay? Now, here, this whole area is what? This is a demand. This whole area is a demand. Price has already moved away from it. Let me drop. You see what happened there? Now, look at this move, this sharp move. Anytime you see a sharp move like that, look at the left or look right, as the case may be, and then project. In this case, price did not even come down here. This move did not come down here, but it stopped at my 21-day moving average and my sweet spot 250. That's 109,250. Okay, so we can use that also as confluence when price moved up. But later in the future, this happened in May, and then where the entry took place was in July. Okay, and then sharp move up. Price moved over 150 pips, quite a small move. And also on my GWT, it was rejecting the support. Okay, rejecting the support on my software, and then here extra confluence, and then a sweet spot 750, 108, 750 level, resistance level. Remember, go back to the resistance video and then you will understand. And okay, sorry for the noise, the bike just passed. Okay, so what about this place, this area here? Look at this area. Did you see price moved sharply away from this level? Look at it. And then in the future, price came back. I actually took this trade, but I didn't hold up to this level. No, I just took only this candle. As at that time I was day trading, not like now that I often do swinging. So price shoots up. I took this trade, I remembered very well. This one, I just took only just this one. Okay. So for people who are swinging, they have been trading this pair. Okay. So that's what I'm saying. This is demand. Price came into demand. You are buying low. Then price in this area came into supply. You are selling high. You sell high, you buy low. Okay, remember. So there is what we call S&D flip also. Okay, there's what we call S&D flip. Look at this area, this black candle, and then this normal green candle or blue, depending on what you want to use. It's a flip zone. You can also flip demand and supply, just like you can flip resistance and support level. You can also flip demand and supply. For example, this is also, well, let's just finish with this one. This one here, price broke demand. There's what we call significant demand. This supply, this is a supply, not demand. This one, this is a supply, came down, after this black kind of formed, and then this one by the side, price dropped. So it's a supply, not a demand. So we just project it, and in this case, price now came, instead of rejecting and keep going down, the trend is changing. So please refer back to when the trend is changing. Okay, the last lower high was broken. The last lower high was broken. Okay, broken by this one, came back, and then give us a supply here. So you don't expect that this supply will hold and keep going down. So supply was broken, and then supply price came back into that area of supply, and then keeps moving. Okay, and keeps moving. Let's look at another random pair. Look at another random pair. Now this is a drop. This is a drop. This one, this black here, is a drop, and we have something by the side. So if we project it, all you do, just mark all this kind of thing on your chart and just wait. What happened here? What happened here? Price came to that area and then rejected it. So I think we just have a small move, but it's still okay. 70 or 80 pip move is fine. One lot is $800. Okay, 70, 80 pip move is very good. This $800 we just made. Okay, all right, and the price rejected from our sweet spot 2750. Okay, which was also in confluence of supply, confluence with supply. Okay, look at it here. We have rejection. Okay, look at this one. This one we can call it one candle. Price move. So look at it. We have a supply here. Okay, in this place we would have hit stop loss. Okay, we would have hit stop loss. But that is one thing about this business. Sometimes price will just hit your stop loss and then move your way. But also, if you look at this place, there's another supply here. See, there's another supply here. So this one worked. Okay, look at this sharp drop, black sharp drop, and then this auger by the side. You project to the right, and then you see price came into the zone, but it didn't touch our sweet spot of 22,500. It didn't touch it, but no problem. If you are a risk person like me, most time in my trade I don't use stop loss. Okay, I don't use stop loss because I have some good equity. I don't use stop loss. So for big account is good, and exactly that is how the banks trade. I would have entered here, yes, particularly this one. I would have entered here based on this sweet spot of 22,000. Okay, expecting that it will hold, but of course it broke and kept going up and kept going up and kept going up. But definitely there was another area here. Also, there is another area here, all this area. When we get into time frame, you will know I'm marking so much. I'm taking all of this area. When we enter into time frame, I will start dissecting it. So my guess will be, if it doesn't work here, it will work here. If it doesn't work here, it will work here. So I don't care. Because I know once it begins to work, the price drop will be massive. Okay, somebody will now say, where's the area of risk management? Me, I don't care. All I do is make money. I look for money and I make it. That is how the banks trade. Okay? You may not agree with what I just said, alright? There's no need to agree. There's no two trader can be the same. Okay, no two trader is the same. Everybody have their own way they look at the market. Okay? And that is how I trade also. So with large equity, even with small equity, even if your account is $10, if your account is $10, let's look at this move. Okay, it's already moved 100 and okay, if it's $10 it will blow, but if it is $20 it will not blow. If your account is $20, you can use 0.01 in one position. This nothing will happen to you here. So against what you now gain here, this is 362 pips. Okay, because you expect that if price reject, it will keep breaking lows. Don't worry, we are still having some other courses to do. I will explain this further. But basically what I'm saying is this is supply, this is supply, this is supply, and price didn't obey this supply, but it obeyed this one, and then price dropped. Let's look for other supply. Let's look for other supply. Okay, we have demand here, but this is not a good demand. The wicks are too much. It's not a good demand. Let's leave this one. Let's leave this one. Let's look at another pair if we can get examples of demand. GBP USD, can we get demand here? It's large, too big. Okay, this one, this is a demand. Price moved away, so we'll just mark this area. Then all you do is wait. Okay, just mark price moves, came back, and then drop into this area. All right, drop into this area. See this price keep touching our sweet spot of 7,500. Okay, and then price moved significantly away from it. Now this one is too big. Okay, this candle is too big. I would have called it a supply flip. If I project down, you see that it obeyed something here, but let's not go there. Let's not confuse you. This is another area. It's another area of supply. Are you seeing? It's another area of supply. Projecting to the right, price went up, touch it, came down, touch this one, went up, and then down like that, like that. This one too is another area. This one too is another area. You can mark them. You can mark them out. When you start your practice, you can mark them out. For example, this one is a current market. You can mark this one out. These are potential areas where price can bounce. These are areas price can bounce. This is another area price can bounce for USD CHF. So when you look at it, check it. If you are watching this video when this has already happened, check it. You will see that in the future, price came to one of these areas and bounced back. Okay, these are very, very significant areas. Okay. All right. So for example, this one, look at this move. Price went back. Okay, price went back, and it can work in any market. It's not just forex. It can work on derivative. Those of you that trade volatility can work on Bitcoin, can work on any market. The goal is what is happening. Once you know what is happening, you can use it on any time frame. Now look at on any asset. How about this? This one, nothing yet. Nothing yet. So like this one, we have supply here. We have supply. Price came and bounced it. Just know that in a downtrend you are looking for sales. In an uptrend you are looking for buys. Okay. With that being said, we have come to the end of supply and demand. Always remember, in an uptrend, you are only looking for buys. You are marking demand zones only. In a downtrend, you are only marking supply zones. You are looking for sales. Alright? So stay focused, stay disciplined. God will help us. All right, it's not easy, but stay focused, stay disciplined.